Okay, just a minute left to go and we'll begin. I'll let you all log in, make sure you can see the screen. If you've got faster internet connection, it will help. So make sure if you've got a slightly slower internet connection that you've disconnected some of the devices that might be taking up your bandwidth. That way you won't have any lags in the sound or video. Okay, let me just quickly take a look. Okay, we've got loads of you saying you're loading. Oh, we've got from all sorts of places. Okay, I think we're good. I think we're ready. I'll just do one check. Is everybody able to hear me? One yes should be fine. There we are. Perfect. Good, good, good. Okay, so without further ado, welcome to this walkthrough of IQ Options platform, and also welcome to IQ Option. I am James DB, and I shall be doing just as this page says, conducting an intensive walkthrough, if you like. So we'll have a look at some of the ways to use the platform, just to make it a bit clearer. You might be new to trading, you might be a proficient trader, but new to IQ Option. Either way, today you'll be very familiar. So let's go to our agenda for the day. IQ Option, easy start, aptly named. So what we're going to look at today. So account types. You'll notice, I'm sure you've all downloaded the platform at this stage, that you have a practice account and a real account. So we'll be having a look at those two. How to deposit. Okay, methods could vary depending on your region, and we'll look at that together. How to withdraw, which is, of course, very important. What goes in must come out. Product types and features. So binary options, digital options, Forex, stocks, cryptocurrencies, commodities, and exchange traded funds. Okay. Long or short positions. Now, we hear lots of different terminologies for long and short positions: call, put, buy, sell, higher, lower, the bullish market, the bearish market. What does it all mean? Let's make that a bit clearer for everybody. Chart types. Okay, this one shouldn't take too long. Most people use Japanese candlesticks, and I'll explain to you why. But we'll have a look at all the available chart types on the platform, followed by graphical tools. So you may want to learn about support and resistance, Fibonacci, and all that jazz. And then an introduction to indicators. It won't be a very in-depth lesson or lecture, if you like, on indicators. But if you would like anything more for the future, then obviously we'll be hosting more of these webinars, and you can put your notes in the messages that you write. And then lastly, but by no means least, how to contact support. And rightly so, it's 24/7. So I'll be showing you where and how. Okay. At the end of that, I will be coming back to you. Like I say, Peter should be answering your queries, especially if they're technical. He'll keep an eye on it to make sure if you've got any issues with sound or the visual. But let's jump right into it. And what you're seeing here is the actual desktop app. Now, this is the desktop app for the Mac. I would strongly suggest you download the application as opposed to just using it in a browser. Although it's perfectly compatible in a browser, it has been optimized by IQ Option perfectly well. And if you log on to the browser and put simply download IQ Option, you'll be given the relevant operating system software, and it works a treat. Okay, so let's dive right in. You can see here in the top right-hand corner, we have this green balance. Now, the green balance represents the real account. Okay. If I click, you'll see here I have options available to me, my practice account and my real account. Now, if I want to switch accounts, it's simple. I just click on the practice account, it confirms, I close that tab, and now we can see an orange balance. Okay. Now, that's probably the easiest way to remember by color, but also it says practice account in case you have any confusion. So if you do want to practice, make sure you're in the right account type, as this money here is virtual, meaning if you lose it, if you have a series of unsuccessful trades or you're simply trying something new, you can top up to 10,000 every time. I'll try to have some unsuccessful trades to lose my balance and show you how to top up. We'll see how that goes. I can't promise you anything. But at the same time, you'll see that this is in dollars. Okay. Now, my real account is also in dollars, and this is a personal choice. You can sign up with GBP or the euro or any other specific currency in your region. Although once you've signed up, this currency can't be changed. Okay, so you pick your currency that you'll be trading in, and then you keep it. The practice account, either way, will be in dollars. Okay, there's not much more to say about those two accounts. If you would like me to show you how to top up, let's have a look at this. So this is 1 minute binaries. I'll be explaining to you all of these lovely products a bit later. It seems to be slowly moving up with a little zigzag, but I don't really care at this point. I just want to show you how to top up. So let's empty this account if we can. I'm not even going to look. I'm just going to press long position. Hopefully it's not successful. I'm going to open up another one. And then I've got the last 9,000, which I'll also put in. So we'll get rid of the entire amount. And I'm going to put them all going higher. That way, I'm not going to be hedging against myself just in case one is successful. So you can see here the purchase time is going down. Once it goes to 0, we'll get 30 seconds on expiry. And then after 30 seconds, it'll go to 15, where we can no longer sell. You can see we can sell earlier to take some loss or some profits, but if we stay until the end, we'll make the full amount. I can't sell now because the 15 seconds have hit. I'm actually trying to have unsuccessful trades. I have a strange feeling this will end in profit, but either way, I think I can still top up. I can, look, top up. I can top up. I've gone back to 10. Okay, plus the 25,000 of successful trades. That was fluky. I got lucky. I can't take credit for that because I did no analysis. Either way, a win's a win, so let's take it. That was an 87% payout, okay, on binary options. Very generous. Oh, it was in the practice account. I should have gone to the real account. Doesn't matter. This is more to teach you rather than making profits at the moment. We also need to understand the risks, and I shall be speaking to you about risks. I trade personally, and I loathe when I hear people who also trade who make it sound like it's easy or have these imaginary bulletproof campaigns that will definitely make you win. Firstly, I don't like saying winning and losing. I think they're gambling terms. I believe in successful and unsuccessful trading because that's what we're doing. We're trading. But there aren't magic formulas. And although people may claim online, you know, follow me on YouTube and do this and do that, and I'll make you millions, it doesn't work like that. Trading's about one thing. It's about many things, but the main thing for me, I believe it's about risk management. Okay. If you manage your risk, it means you have less chance of having unsuccessful trades. So you learn about technical analysis, you learn about fundamental analysis, you learn about the asset that you're choosing to trade, and you join with a target in mind. Okay. If you want a life hack, that's the life hack. Don't trade blindly. Don't guess. Don't say, I want to make $1 million in a month, but I've only got $10 to invest. It's not going to happen. Why? Because statistically, you don't have enough leverage, or there's no asset movement that moves fast enough to turn $10 into $1 million in a week. You need to be realistic about your goals. You need to have an idea and a target, and then you increase your chance of success because you stop trading emotionally. Okay? That's my little bit of risk management. So let's continue. Let's imagine I didn't have a successful trade. I would have had $10,000 in the practice account. Okay? There's not much more to show you with the first part of the webinar. That's the two different types of accounts. No more bells and whistles. Let me move on to how to deposit and then how to withdraw. Okay? Big green button. Can't miss it. Deposit. We click on it. Okay? We can top this up when it's low, but we can't when it's over. Okay, this is for you to practice. It doesn't make a difference if this says 65 million. It's practice money. You cannot withdraw your practice money. Okay, be lovely if we could, but no risk, no reward. That's how trading works. Now, the real account shows that I have $1,000, and if I wish to top up my real account, I can, quite simply. Minimum is $10. Now, let me add something. When you register, when you join, okay, and you've completed all your verification and everything else, you are not obliged to deposit in order to get your practice account. IQ Option offers this practice account without any obligation, which is not as much as other brokers can say. We do give you this practice account. It's available to you without a deposit. There's no time limit. There are no restrictions, nothing to unlock. It's a fully functioning account, meaning you can perfect your trading before taking any risks with your account. And the reason we do that is we believe in longevity. IQ Option cares about its traders and cares about their success, so there's no rush. Top up your account. So we click here, and it gives me my options. Visa, MasterCard, Skrill, Nutella, these are e-wallets, and then we have web money. Depending on your region, you may see different deposit methods available. And that's no big deal. If I click, for example, on Skrill, I've got these numbers here. I can choose either a set 1,000 or a set 10,000, or maybe I want to put 120 because that floats my boat. If not, don't forget, $10 is your minimum, one of the lowest minimums I've ever seen in trading, to be honest with you. And then you proceed to payments, make sure it's at least 10, and it tops up your real account. And it's that simple. Likewise, if you want to actually deposit from here, you can, and you can withdraw from here. Okay? It's not complicated. It takes a minute. That's how quick you can deposit. Now, if you want to deposit $10 to see how quickly you can take it out, again, easy. Click withdraw. It opens up a page. It's a safe page. You can see the padlock there. So all of your funds are protected. This is encrypted. You've got your risk warning here because, of course, we're responsible as traders. And then I get to, it's at the bottom there. I get to pick which type of method I would like to take away my money back into my account. Again, I spoke about Skrill earlier. I'll show you again. Doesn't have to be Skrill. You can see there's different methods. But if I pick Skrill, I can take out my full balance straight into my account via email for Skrill, minimum 2, because that's their legacy, that's their policy, and 1,000 max because that's what I've got here in my account balance. I simply put the numbers here and I press withdraw, and it's that simple. It says 1 to 3 days, reason being because we don't control the speed of other payment aggregators, okay? It's something which they have to process. It might take 1 day, it could take half a day, but that's a buffer, okay? So no need to panic. Now, this is the fun part, getting back to the platform without scrolling through 1,000 pages. Here we are. So that is how you deposit, and that is how you withdraw. Very easy, okay? If you do have questions, like I say, I can't see them, unfortunately, because I'm sharing my screen, but I hope Peter is keeping busy if you do, and I will answer more of your questions later. But I don't think at this point we do. Let me just have a quick sip of water. Otherwise, I fear my larynx will dry up to the consistency of hay after speaking for up to an hour, which is fine. Next on our agenda is basically the product types. Now, we can see here on the top, I've listed them nicely, actually. I've put all of the product types that we have. We'll go through them individually. We can have up to 9 screens here available. So 9 tabs and up to 9 screens, as you can see. This is obviously more useful if you've got like an extension screen, like a big television or maybe a projector. I'd find it quite hard to trade with 9 screens like this on a laptop. But, you know, again, whatever floats your boat. I'll go back to 1 screen for now. And the additional 2 that were added were to complete the set of 9. I've taken those away. And we'll start with binary, which you saw at the beginning when I was trying to show you how to top up your account. So if I click here, very simply, I get a list of all of my products. We shall go through them individually. Binary options, 27 what? 27 assets. That's what. Okay? You can see Euro USD is at the top. Why? Because I've starred it. Why? To stop me searching for it. If I scroll down, I might decide I like trading the Great British Pound with the Swiss franc. But it's all the way down there and I'm lazy. I want it at the top. So I click here and there you are at the top. Easy. I can also create an alert when it reaches a certain price to let me know. And I've got information here, which I'll show you from the main screen shortly. Okay. And this information that you'll be shown on the next asset, it's available for every single asset. It's extraordinary how much information is offered by IQ Option within the platform. I've not seen anything like it. Everything you need is here. So we'll look at that in a second. Let's also look at these 2 columns. Profit 1 minute plus, profit 5 minute plus. Okay, I'll go through this with you in a second. But if we scroll down the asset types, we do have also gold. This is a commodity, but it's available. And you can see we have some stocks. They're not open yet. 17 minutes left. You can guess why. I can pretend that I can see you guessing now, although I can't. But yes, let's pretend you guessed right. It's because the American market is opening shortly. And once it does, these will go live. Okay, you can see the opening hours there, just because we like to be that efficient. Okay, so if I go back to the main screen, now that we've established the what, let's look at the how. Remember those 3 symbols we saw earlier? Let's actually click on info. And there you have it. The world of information available to you, from the price, which is live, changing constantly, session change, which shows you since the market opened. I can also change my preferences here or go straight back into trading. Lots of stats, 5, 60 and day change. I can see how many people are going higher, how many people are going lower. There's quite an even understanding here of the bid is favoring towards slightly a bearish market. But again, it does depend on the time frame that you're choosing to trade. Lots more stats, shows you where else you can trade Euro USD on these 2 products here. It says major. What does that mean? Quite simply, a US dollar paired with any minor becomes a major currency pair. Is that for today? It's not. Can we talk about it in the future? We can. Just ask for it and we can do that for you. We can also see news related to the pair, one or the other, technical analysis, economic events. These are macroeconomic events, okay? The relevance we'll talk about soon when we get to here. And trading conditions, when and how, okay? It's, for me, a very practical way to trade. It gives me the world of information. Like I say, it's not only for Euro USD. If I click on gold inside my commodities, I can do the exact same thing. And that's why it says to me also available in binary, because we did see it earlier, and it's a commodity. If I click full information, I won't, because it'll open up a browser and that's faffing. And it's just going to give me more of an in-depth bit of information. But to be honest with you, I've got as much as I need here for now. But do feel free to click on the full feature so you can open up a browser. For the sake of time, I won't do that now, but there's so much information available to you. Okay, so back to binary. If we go to time, we can see 1, 2, 3, 4, 5 different trading times with 80% profit, and quite a few more with 68% profit. Risk, reward. More time to trade, lower profit. Less time to trade, higher profit. It's not a trick, it's not cruel, it's just how trading is. This here is a faster moving pace, and because of that, the risk is higher and the profit is also higher. So the highest I can pick here is 5 minutes, which means within 5 minutes, I can make as many purchases as I wish. Now I'm in a practice account. Shall I go to the real account? I may as well. I'm not going to mess around with big amounts because this isn't about making money today. It's about showing you how it works. So let's assume this is binary options. It seems to be quite a sideways movement. Would I regularly trade this right now? Maybe not. Market conditions don't look perfect. But let's say I go lower. I don't want it to ask me. I want one click, so I click that. And I've said lower. And there you are. It has gone lower. And you can see if I sell early, I can now only hit some of my loss as opposed to all of it if I wait until the end, where I will take the whole amount. And that's because the trade hasn't finished yet. And as you just saw, volatility means it could go back in the opposite direction. So the system's looking at how much time we've got left versus the risk. And that's how it works out this number here. So if I choose to sell now, I will be out of pocket by about 50 cents as opposed to the full dollar, which is why binary options aren't specifically all or nothing as they're claimed, because they're all or something. Also, likewise, if the trade closes at the same price as my open price, it goes to zero, which means I get my investment back. So yes, all or nothing, but actually no, more convenient than all or nothing. The reason I chose down there, by the way, is because I said roughly that could be like a resistance line, which we'll talk about later. Plus the RSI was quite close to the overbought. But this tech analysis is quite loose because it's 15 seconds. That's very noisy. So I'm not claiming that that tech analysis was perfect. I just gave you a reason to why I preferred to go with the lower option at that point. So as you can see, this time's ticking, and it will continue to do so until it gets to 30 seconds. Then it will go red. At 30 seconds, I will have 15 seconds to sell, where I still have the option to take some loss or some profit. When it hits 15 seconds, this button will not be available to me. Okay? I will have to sit back and wait until the end. Now, I'm going to change this because even though we're just testing out the platform, I do like to have profitable trades. So it looks like this point here could be a true reversal, even this one here on a more long term in terms of the way it's moving, because you can see it's slightly moving upwards. I'll show you some trend tools later. But I do like to end with a profit as opposed to a loss. So if I do get the opportunity to close that, I will. Otherwise, I can hedge and open up trades in the opposite direction if it starts wildly going up with lots of movement. If it wildly started trending upwards, then I will take advantage of that. Otherwise, for now, for example, I might say I'll go for a second lower position because it seems to be stuck on this line here, which is a good resistance, as well as the fact that it's on the overbought. However, MACD is telling me that the trend might be moving upwards now with the crossover. But like I say, noise, lots of noise because it's short-term candles. So we will see more information which might not be as relevant in such a short time. So I will let this go down to a minute because I'd like you to see how it works. I really don't care about the outcome. This is more to teach you. But let's take a look at this and see what happens when it gets to 30 seconds, okay? This is still persisting to try to push up. So I'm going to say lower again because I don't want to go against the trend. That's bad advice. But I just have a belief that it needs to come back down at some point based on the fact that it seems to be trending between this as the highest point, but I could be wrong. So let's have a look at this. You can see that this amount keeps changing as the time is changing. As this time gets less and this comes either more closely towards profit, that will go higher. The further away it will go lower because my chances are gone. So I've now got 25 seconds left of purchase, meaning I can open up positions to try to mitigate these losses if I believe it will continually climb past this point here. After that, I will leave it to expire naturally. I won't close early unless I've got a cheeky profit, in which case, why not? Otherwise, we'll wait now, 2, 1, and then it goes red. Okay, I can still sell. For the next 10 seconds, I can still sell, but I can't open up any more trades in this window. So let's have a look to see if this corrects to go back down or if it slowly continues going up. You may continue up to about this point now and then do a slow reversal. Either way, we'll come back to it later. So binary options work that simply. And you can see this trade resulted in a loss because the position was opened here as a short, here as a short, and here as a short. And you can see the candle is above these lines. So that's an unsuccessful trade. If this now comes back down, that's hard luck. Chances are it will. But you need to look at the time that you're trading. So you might want to look at a longer period of time, depending what you're trying to achieve. Okay? So that's binary options. 1 to 5 minutes paying 87. It could be 95. Sometimes we have promotions where they're even higher. And then 68% for the shorter because of the more time attached. I'll get rid of that. Binary options are very popular. Reason being, it doesn't take as much analysis as if you're trading stocks, for example. When we get to stocks, we'll talk about it. But stocks, you might want to find out about the company. You might want to find out about the EPS. How are they looking after their shareholders? What's their R&D like? What kind of growth are they looking to have? Lots of things, But with trading, with this kind of thing, you can just visually just see where some of the points are. Now, as you can see, it is coming back down, but that could change. It could be a small correction, and this could be what we're seeing now as a slow upwards trend. But would know that from having higher highs, which we haven't really had just yet. They're about similar. So that's binary options. I think it's fair to move on to digital, which is here. Again, if I click here on digital, you can see similar kind of thing. Profit aligned here. Hourly changes of the market, plus the features we saw earlier. In this section, we've only got currency pairs, okay? Plus OTC on weekends, which is over-the-counter trading, when the markets are traditionally not running. And also, if you hover over any currency or any asset, you do get a brief window come up that shows you what's going on with the option to click on further information. So digital options, why is it different to binary? Well, there are some differences. At the moment, this looks the same because what we can see is higher and lower and it's ticking down. But the small changes are, firstly, we have 1 minute, 5 minutes, and 15-minute contracts only. Okay? Those three, and that's your lot. Also, only currency pairs. Digital options, however, for some people, it offers a bit more flexibility, and I'll tell you why. This show all opens up bubbles. Now, I've only got 2 there because of my candles, but if I move down to 15 seconds, I should get a few more. Okay, these here are called strike prices. Now, if I open at the market price, which is here, that's my payout. If I open up here, I get a higher payout because I'm further away from the current price. So this can go up to 900% as long as I overcome this line here, because that's my strike price. Now, unlike binary options, your open and close price, they cannot be the same. You will not get your investment back. Okay? You must surpass the strike price. So even if you open on the market price, if it closes at the same position, you do not have that investment returned to your account. You must surpass the market price. Now, you can also do something we call buying already the position in profit. Now, what that means is if you buy something within the money, this is now, say, going downwards. If I click here, I can't go lower, but there should be a strike price available to me, depending on the market conditions and volatility, which will give me a strike price in the money. There's not one now, and that's literally just market conditions. Perhaps later I'll be able to show you one live, but you can buy within the money. So if I go here, I would be going long within the money and I'd get a payout. Okay. That means that I'm already going in the right direction, but I will get a payout based on it. I will show you a trade now using a strike price. I'm not massively in love with this movement. It looks a bit flat, although it's slowly moving down. There's not much volatility. I'll go lower just for the sake of it. It opens my position, and then you'll see that I can sell early again, depending on what the condition is, and my purchase time is now changing. This sell button will never disappear. Okay, it will be there way after the 0 time, all the way down to the expiry time. Okay, so we'll watch that. If I sell early, can you see I can take some profit? I don't have to wait until the end. I can say that I'm happy with 28% profit or 33% profit, depending on the amount that you've invested. But I might say, no, it looks like it's strongly going down. So I'm going to stay on it and enjoy this movement. Bearing in mind, there's no safe trades. So if you feel comfortable to close early, close early. There was someone who once said you can't go bankrupt on small profits. So even though it might not be 74, I choose to sell early, I get 39. It's still an achievement. That's why I say have a target. And you can see there, seconds after the trade closed, it shot up. Now that resulted in profit, but we're talking seconds. That movement, that fast movement, could have knocked out my trade within seconds. So it may have been beneficial to close earlier. And the same goes for when you're not in profit. Okay. If you feel that the direction is moving against you, and it's not likely that the direction is going to reverse anytime soon, I outranked some people. Wow, there you are, people. I've been outranking. Happy days. That's just the leaderboard. We'll look at that in a sec. So there's nothing wrong with coming out of a trade early if you feel that you can't mitigate the loss, either by hedging or by the actual market going back into your favor. It's best to take small losses and best to take small profits rather than no profits and full losses. That's a risk management technique. It's a lot different to the all or nothing kind of attitude that some people have with options. It just shows that you have got some control over what you're doing. So, like I say, digital options gives you higher percentage of payouts and the selling point at any time. To be honest with you, if I picked 15 minutes here, it gives me loads of time to have a look. This looks like quite a good bottom, but these are 10-second candles. So if I go to 2-minute candles, I could say that it has been respecting this line for a while as a support line. Okay, I can even say even there where it currently is at now, without too much analysis. And I could say, well, I reckon in the next 12 minutes it's bound to go up, and I can click there and say higher. However, it's not reached that price yet. That could be foolish. That's the highest price it reached. So I'll say about there and I'll go higher. Okay, I'll confirm that and come back to it. Why? Because it's nowhere near there now, but I've got some time, and maybe it will climb back up to this point, because now it seems to me to be on the bottom line. You can see the RSI is showing oversold, which suggests it may go in the other direction. However, RSI is a leading indicator, meaning if it's trending in a direction, if it's snowballing down, it may give you false signals and continue to just float on this red line. You might want to use something like the alligator for a trending movement. or maybe even Heikin-Ashi candles, which we can have a look at together. I think I'm satisfied with how much we've looked at on digital options. So I will leave this to carry on, regardless to what might happen. And we'll move on to Forex. Okay, Forex is the big daddy. I think anywhere between 6 and 7 trillion daily volume traded worldwide, which is phenomenal. Absolutely phenomenal. So we can see here Euro GBP. I've got daily candles. Why? Well, to be honest with you, you do have some day traders that jump in at market open. They play with the volatility. They'll scalp some positions and walk away with a percentage of profit based on the pip movement. Happy days. The kind of trading that I choose to do, just because I like to analyze the markets, is I look at strong support and resistance lines and lines that haven't been crossed in a while. So, for example, this line here, it tried to breach and then just it fell down. So I recently put a short position just here as a pending order. And we'll talk about pending orders now. That plus sign there is a pending order. Now, I can also make an alert just to inform me that something is happening. But if I say create pending position, you see what happens to my buy and sell buttons. They have these clocks suddenly. And I can say, I would like to invest $100 with a multiplier of 1,000. We'll talk about this in a second. Don't get too excited just yet. And I'm going to go short. And I say sell. Okay. Always purchase with one click. I don't want confirmation, or I do want confirmation. And it tells me all the information about the trend here, the trade here, including my overnight funding. What is overnight funding? Well, it's a fee that comes out because I'm using leverage. Okay. A lesson for another day. So I say sell, and I've made my pending order. And that will stay there. And I will not be charged, no charges at all, until this price slowly rallies back up here eventually. And once it hits, it will execute my trade as a short position. So if it hits here and carries on going up, then wrong call. But if it hits here again and starts coming back down, I start making profit. And that's how pending orders work. And you can access a pending order anywhere except for inside the spread. So I'm going to move to smaller candles so you can see the spread, because it's so small that it can't be seen on a daily candle. So I can't open a pending order in here. See, plus sign, no pending order. Only outside the spread. Okay, quite simple. And that's just the way the platform works, because the spread obviously is the fee zone. It's ask minus bid. You can't open a position in it. But outside of the spread, you can. And because the spread is shifting together with the price, you can still open a position here as a pending order, but you will need to wait for the market to move down before this spread has moved down with it. So not a massive issue there. In Forex, obviously we only find currency pairs because it's foreign exchange. And again, all the same features we saw before. Change shows me the order I might want to view by the best change going up or the worst change going down. I might want to see the assets that let me have the lowest multipliers to the assets that give me up to 1,000 multipliers, or leverage. They mean the same thing. I can also see by spread, the lowest spreads to the highest spreads. Okay. Now, please bear in mind that when we're opening these trades, what you're looking at, this number here, is how many of the second currency, otherwise known as the quotes currency, you have to pay to buy one of the base currencies. So when you're seeing here, for example, Japanese yen 118.4140, that means that's how many Japanese yen you need in order to buy €1. Okay, that's how that works. So I think that's quite clear. I'm going to show you this later, because this here relates to all of the products from Forex down to ETFs. Options are separate. These are known as CFDs, contract for difference. I won't go into it too much, but I'll say to you that you're not physically buying the assets tangibly. You don't own an Apple stock when you buy an Apple stock on the platform. You don't own a block of gold when you say buy on the platform. What you're doing is opening a position at said price, and the profits that you make are based on the close price. So the difference between the open and the close is either your profit or your loss, depending which direction you chose to trade and which direction the market actually moved. Okay? I hope that's clear. If not, I will know at the end when I look at your comments and I'll repeat it to you. In the meantime, back to Forex, where we have 49 different currency pairs available at the moment, and you can see the multiplier. Okay, if I pick a 50 multiplier, it shows me my profit on the side here, depending on which direction it goes. Now, I want to put this quickly to hourly charts so I can zoom out a little bit. Can you see the details are blocking? That's annoying. Can you see where we have our buy and sell? Depending on what we're trading, the multiplier will amplify our profits, but it will also amplify the speed that a trade can close. Okay, and that's something which is important to understand, because when we don't understand that, it means, let me quickly get rid of that. So we go back to the regular, as you can see, the regular buy and sell, no more pending order. Although my pending order is still available here. We haven't looked at that yet, so don't worry, we'll look at that after. It's important to understand that if we use a very high multiplier, like 1,000, although the profits will be multiplied, okay? So if I invest $1, it's like I'm using 1,000. But my auto close will also come closer. And I will show you this with lines as an example. Please don't take these as matter of fact, but I'm going to give you a physical example of what happens. So if I take a horizontal line, and let's imagine for the sake of hypothesis that this line here, if I make it red, because we obviously can customize everything on the platform, and I make it slightly thicker so we can see it. I'm just going to come out of the full screen mode there, so my calibration's slightly better. Okay, let's imagine this is my auto close if I open the position here with a 50 multiplier. Okay, so let's say I have a 50 multiplier, and let's imagine these are day candles, and the last time it touched this price here was like 8 months ago back here, just for the sake of argument. And I only want you to see this to understand the multiplier, not because I'm trying to show you some analysis. Your multiplier would be further away with the auto close based on how high it is. Whereas if I put 1,000 multiplier, my auto close would come up. And maybe it would come up somewhere like there, for example. Meaning, although my profit is amplified by 1,000 moving upwards, the distance I have to close my trade is a lot closer than if I had a lower multiplier and it'd come down here. Now, please, again, these lines are the hypothetical lines. It isn't exactly like that distance. I'm just showing you how a multiplier affects your auto close. And I think that's been made clear now. So with Forex, like I said, unless you're someone who likes scalping, I prefer to day trade. And I'd look at patterns, but I wouldn't trade Forex without first looking at news, which I can find here, here, here. This is for cryptocurrencies, these two. But I'd look at the news, and I'd look at what's happening in the markets. I've got all my sources here. It tells me which currency pairs are being affected by whichever news I'm looking at. I would also look at global news. Every day I check the global news, because if you're trading Forex, you need to know global affairs. There's lots happening at the moment in the markets. Lots of uncertainty causes volatility, but it also means that we need to be more careful when we're trading because of that volatility. But you can also see macroeconomic events. Now, macroeconomic events are events that are happening, and you can see the time, the country. Now, this time is set to my region, okay? But your region will be set to your platform. So it shows me the time of the event, the importance with these two dots here. I'll explain that in a second. Which event I'm looking at, and the country. Okay, I wouldn't really go anywhere near Forex without understanding fundamentals. Otherwise, I'm stabbing in the dark. Now, if I scroll down, I can see that we've got a balance of trade macro from the UK happening tomorrow at 8 o'clock in the morning. Okay, if I click on this, it says to me the balance of trade, a description about what it's about, which currency pairs it will affect, obviously every single one which has GBP in it. Okay, mostly the GBP is a base currency here, except for with euro where it's a quote. I'll explain what that does briefly. I don't want to go too much into it though, because then we start digressing. So 3 circles or 3 bull's heads, if you use something like investing.com, shows high importance. What does it mean? It means it's more likely to have an impact on the market based on the outcome. So if I was trading Euro GBP and there was a positive outcome for the balance of trade, which is obviously from the UK, it would be good news for the UK, okay, if it was a positive outcome, okay? So we need to first establish what is a positive outcome. For example, if the number said 4.2 billion people unemployed previously, and the number that is announced is 5 billion, the number is higher than 4.2 billion. That doesn't mean it's positive. 5 billion people unemployed, obviously worldwide, it would be impossible based on the numbers that we've got. But hypothetically, it would be bad because it means most people are unemployed. So higher number doesn't mean positive outcome, firstly. So first, know what you're looking at. Secondly, understand which country you're looking at. So a positive outcome, regardless of what the numbers say, for the UK would not send the Euro GBP flying up. Okay? Because the Euro is the base currency. Meaning the good news for any base currency, whether it's USD or the Euro, whichever currency pair you look at, all of these first ones are base currencies. Good news for these countries should have a positive impact on the entire pair. Good news for the quote currencies, however, it should have a negative impact for the base currency. There you are. And I lost my dollar. Sad days. Never mind. So as you can see, this isn't guaranteed. And I'm never going to say to you definite. There is nothing definitive about trading. If you look at the market analysis and you see something with 3, it doesn't mean it's definitely going to have a high impact. And if you see something with 2 or even with 1, which you can find them, you don't have many macros with 1, but some of them are. If you go to investing.com, you can filter only the low importance trades. But obviously, what use is that to you? If low importance equals low volatility, there's not as much opportunity to make money. Another thing to bear in mind is what's happening in the world globally, meaning that there may be a macro report released, but you don't necessarily see a huge movement in the market, where something like NFP, which happens once a month for America, I'm not going to explain to you what it is because, again, it becomes a different lecture. But we can do more of these in the future if you'd like. But something like NFP, if it's positive, we often see sharp movements in the market, which do obviously correct after some time. But the reason is because it's an important event showing the amount of work that's been created in the country. Now, at the moment, there is so much uncertainty because of what's happening in the world globally. Okay, and I could mention what that is, but for longevity of the webinar, if I give a specific subject, and we all know what it is because most of us are sitting at home in quarantine, but I want it to have longevity. But because of that event, it means that the markets may not react as much to some of these things because there's a bigger problem. So imagine it physically. Imagine somebody steps on your toe. Your toe really hurts. But if you've got the worst migraine in the world, you might not even notice it. Okay? It's the same thing. Macroeconomic events are effective, but we also need to take into account what's happening globally to understand that the movements might not always respond. Okay? That's a bit about the market analysis. So the multiplier, in a nutshell, the higher the multiplier, the higher the speed of your profits, but the quicker your trade could close based on movement if the movement goes against the position that you've asked to move into. Maximum I can invest is my balance, okay? This may not always be the case. If I go to binary and I go to trade, I can't trade my entire balance. I can trade up to 850 if I had it, but no more than that going higher because of exposure. Because again, that's to protect the trader and the broker to make sure that all positive trades can be honored. So exposure, again, it's a different terminology, but it basically means it's controlling the risk to make sure, you can see it changes, obviously. It's controlling the risk to make sure that every trade is honored and everybody who makes profit goes away with that profit. Okay? So with Forex, pick the currencies that you like. With anything in life, do the job that you like. If you don't like your job, chances are you may not be as good at it. Okay? If you love your job, chances are you'll wake up positive, interested, and you'll be good at it. I love trading and therefore I want to research all of these things. Otherwise, I wouldn't be enthusiastic. And if I wasn't successful in one or two trades, I'd be like, I don't want to do it anymore because I don't really love it and I've lost some money. Whereas if I love it, I will look at what I've done wrong and I will learn and I will get better. Okay? I will learn to manage my risk and I will get better. So pick a currency you like. Pick a currency that you know about. I know a lot about the GBP because I know tons about the UK. So knowing what's happening geopolitically will help me to navigate through all of these zigzags. Okay, that's Forex. Moving up to stocks, 170 stocks. You can see again, same information here. The change again from the highest growth to the lowest movers, multiplier from the lowest to the highest. All of these are subject to change based on market conditions. Zoom has been growing the most for quite a while, actually. You can see the multiplier is on 20. But I was watching Zoom during a lot of the crash, but because it was a relevant stock, it was growing quite a lot, but it actually exceeded its market cap from what I was reading, just as a side note. Or you can look via spread, okay? You might want to trade with phenomenally low spreads so that you can start making profit faster. So you come out of the spread zone and then you start making profit. Now, we should have the entire market available to us at this moment because America should have gone live. So if I quickly go to the S&P, yes, we have. We will come back to that in a second. So let's look at Apple stock. Okay, who doesn't love Apple? Android users, that's who doesn't love Apple. So stocks are a bit more confusing. We've got all these gaps. We've got different length candles and the movements are choppy and what does it all mean? And why is it so expensive? Do I have to spend $271 to buy? No, you're not buying the whole stock. If you spend $271 to buy the stock, yeah, correct. But you're trading on the difference because it's a CFD. So when we see movements like this, now I'm not going to talk globally, and I'm not going to quickly go through assets books to see when they have their quarterly release and everything else, because it isn't important for what I'm trying to explain to you. But if you were trading Apple, yes, their earnings calendar would be important. And if you went to info, for example, you can see the earnings calendar and it tells you when they're releasing their information to their shareholders because they are a public company, which means people have the right to know what they're trading and what they're investing in. And again, we've got the world of information that we saw earlier, including trading hours for my time, very convenient. But let's talk about this gap. This gap means that when the market opened the next day, and it could have been after the weekend, it could have been after the next day during the week, doesn't make a difference. When this market opened, there was a jump, okay? Meaning between here and here, there was good news. Now, this is hourly candles, meaning this is today, this was yesterday, this was the day before. So that was when the S&P probably started recovering on daily candles here. Okay, so we see the jump, jump, jump. Why is Apple correlated to the S&P? Because it's one of the biggest companies, meaning it's housed. And because of that reason, when we see movements, they're sometimes correlated, not always. Don't take it as gospel. But that's why we've got this jump, because we saw some positivity in the markets, because Trump is desperate to convince the world that everything is perfect, and that way the markets recover. A lot of trading is based on trading sentiment and psychology. But if you're buying the stock long term and not just to make bits of quick profit, you might go to daily to see what the actual stock has been doing. You might go to weekly. So every candle represents a stock. So we can see here, Apple is not a bad growth stock. It's got its chops, it's got its falls. But that's the lowest it's fallen to in quite a while. And that was back in 2018. And I bet if I Googled right now, 2018, on 31st of December, I would know what happened. If I remember rightly, it was when we had a huge drop, I think up to 25 to 30%, actually. I think that might have been it. Don't quote me because I haven't got Google open and I don't want to misinform you, but it might have been when the market was doing some good growth under Trump and then dropped and then started recovering again. But yeah, I would look at the distance and how long it took and the severity of the news that caused that fall. And that's how I'd make my decision. So Apple for me would not be a stock that I would short necessarily, but I also wouldn't open a long position here because I would look for lower lows. I might want to open a position, say here, because if I go to my daily candles, I feel this is a better position to open, and I might put a pending order. So I would research the company that I wanted to invest in as a stock. If I wanted to day trade, however, I don't really care about what's happening next month's quarter. I care about what's happening now. So I will look at the pattern and I will say, okay, it seems to be going up, then coming back down again, and my RSI is not really sure. And this seems to be based on global news. So maybe I can go to Google and read what's happening with Apple and get an idea of trader psychology, and then I'll know what to do. Okay, my multiplier is 3 to 20 for this. Again, multipliers can change, leverage can change based on market conditions. You can see my volume here. We haven't really spoken about volume. I'll try to discuss it with you a bit later, but it basically shows us the daily movement of the market. But this is hourly, so my candles reflected and my volume also reflects. Another point on that, when you have technical indicators on the screen or anything like that, they match the candles. So if I go from hour to daily, they do change, okay? Because it's only useful to whoever's trading in that period of time. I'm sure you're asking questions. If you're not, happy days. But if you are, I hope Peter's helping you, and I will come back later to answer your questions. This video will be available in the future online, meaning that if you only want to come back to a specific section, you won't have to watch the entire webinar, but you'll be able to look at the specific tab on the subject that you want to cover again. I think we're good for stocks in terms of how they work. Again, market analysis, read the news, okay? Read the news. You might think, why would a stock be affected by the news? Well, we know that the aviation community has been strongly affected by the news. So if I go to Airbus, for example, and I look at their movement, it's not been great, has it? Not particularly. What about if I go to Boeing? Has it been great? Again, not particularly. They're still moving up, but it's not the best. And that will be for any airline or any duopoly that creates airlines. Now you might say that the entire stock market is doing this, and if I go to S&P and go to daily, it's quite similar, but the S&P's recovered a lot more than EasyJet, and that's just based on the fact that specific industries will be affected more by whatever's going on globally. Next up, let's look at cryptocurrencies. You may be thinking they're not as widely traded as they were. And admittedly, in 2018, there was a boom, and that boom is slightly being stifled by regulation, but they're still moving. I mean, look at that candle. What a whopper. If you made a short position here and you closed it here, you would have made a lovely profit there. I mean, look at that movement. It's huge. So there's still volatility. Cryptocurrencies, they make up 28 different assets. We've also got the multiplied ones, which is great. If I click on Bitcoin 100, I have a multiplier of 100. What more could I want? Imagine my 100 multiplier here to here. I could work it out for you, but it'd take a bit longer, and that webinar is for another day. This is, however, different. It's a bit like an option where you've got so much time to purchase and then it has an expiry. But let's focus on regular crypto positions. So we'll go to the daddy, the Bitcoin, the blockchain king, and we can see again we have a spread, we have a multiplier, and we have the investment amount max both ways. Okay, exposure. What I haven't spoken to you about yet is this. Okay, now this again is available for all CFDs. This is available for Forex, for stock, for crypto, for commodities, and ETFs. So I'm going to show you these parameters once because there's no need to show you them for every type of CFD because they're the same. Okay? Percentage, money, asset price. Percentage, money, asset price. Meaning, I might not be good with percent, I might be good with money. So I tell the system, open my trade, but when I have made $20, close it, happy days. Or open my trade, if I lose more than $5, close it. I don't want to lose more than 5. Let me say one thing to you. These numbers are not set in stone. Okay? There's something which exists in trading called slippage. And slippage can occur for different reasons. On the platform, it can occur because of internet lag. It can occur because an asset's too volatile or maybe it's not available. But if you imagine you've told the system to close when your profit's at 20, and then you get this great whopping candle zoom up really fast, it will close at the next available price. Not the next best price, the next available price. So maybe it closes and you get $24 profit because by the time it closed, it was above what you requested. Equally, it may close lower than $5 because it moved too fast and you got the next available price. Okay? For example, you may have asked your trade to close here in either direction. Maybe you said short position to close here as a profit, or maybe you went long and you said this is where you want it to close. Okay? But then we had maybe a sharp movement here, which we'll demonstrate with the wick on the candle. That isn't what happened. I'm just giving you an example. That movement would have meant it closed here if it was a sharp movement. That's what we're going to imagine was slippage. So although you said close at 4761, imagine it closed at 4408. Now, obviously, that's never going to happen because these are daily candles. So slippage doesn't happen like that. We're going into seconds. So maybe we'll put 15 seconds. And if we're going to use that same candle as an example, you can see, for example, this gap here. Maybe you said close here at 6739 and it actually closed at 6734. That'd be more likely for you because of that jump. So you would have made an extra $5, happy days, or maybe lost an additional amount of money based on your position. So that's because of slippage. Otherwise, these parameters work perfectly well. Then you have trailing stop and use balance to keep position open. Now, whichever country you're in, you can read this in your local language if it's easier, but I will explain it to you. Okay, now a trailing stop is great. I'll keep that on there whilst I'm speaking. But imagine your trade is moving into profit and you don't want to necessarily close it, okay? Because you want to keep making profit. So if I go to 30-minute candles and I click to the middle, so it takes me to the current price on BTC. In fact, to show you trailing stop, I don't know if I want to use BTC. I can be cheeky. I can be cheeky because I've got these lines which I'm going to use to prove my point. So I'm going to take my graphical tool just so I can show you something, okay? Just make sure this pans out. So imagine that there, movement. is similar to that movement and similar to that movement. They're not directly similar, but they're similar. So the rise is the same every time in one sharp jump. Okay? Imagine this was upside down and these were falling points. Now, I can find you an upside down one. I can find you falling points, but I just want to show you how a trailing stop will work. Imagine this amount here, and you can see the trailing stop when you click it. Again, you can pick either money or profit or the price. If I went to percent, because I like to calculate everything to the T, and I said 5%, okay? If this movement here was 5%, I know that naturally they're the kind of spikes that we get. But I think it's best to show you this with an asset that has a bit more volatility, because I actually want to show you this working. Let me quickly go to Forex and go to hourly, because it will have a bit more volatility here. And here's a perfect example. Let's not do things by halves, say. I'll do the same thing again. If you took a short position here, because you can see it's been going down, okay, quite more so there as a support, but just take it as an angle that it's been going down. Let's not put support resistance just yet. If we did that and we look to say, I'm going short, so I open my position here. As it's going down, I'm making profit. It comes back up, I'm losing profit. It goes back down, I'm making profit. It comes back up, I'm losing profit. It goes back down. You get the gist. You don't know when to close because it keeps going down. But you don't want to risk it reversing and coming back up so you lose all of your profit. So what you can do is you can look and say, when it does come back up, how much does it come back up? You know, these corrections back up, how much money, how many pips, what percentage does it move up? And you can adjust your trailing stop to follow how much this goes in the opposite direction to your trade. So you might say, whatever percent this is, let's say this is 3% for the sake of it. Anything more than 3%, meaning anything more than this much against your trade, it will close and you'll be in profit because you've asked for the trailing stop whilst you've been in profit. So these small corrections, it won't close for you. But then when you start seeing it turn around, for example, if I can find an example of that. Yeah, we can take this. Say you've had a trailing stop and they've all been quite small deviations coming back up, like this size. Small, small, small here. And then you had a beautiful drop, but then you got this huge growth here. Okay? That goes against the parameters that you've said. So it will close your trade for you. It's not going to continue going in the opposite direction. So that's a trailing stop. And then use balance to keep account open. It's quite simple, really. If you've put an auto close of 95%, usually that's when your margin, you'll lose your position, basically. I'm not going to complicate things for you. So at that point, your position would necessarily close and you'd keep the 5% which is left over from the trade. Okay. Now, if you open up this condition, you allow it to take out of your balance, which is up here, an additional 20% to keep that position alive. Okay. And it will keep doing that until the position reverses and goes in the other direction. So you need to have money in your balance for this to happen. It will take 20% of your position and it'll keep doing that, funding your position, because you believe that even though it's gone below where you thought, it will turn around at one point. Okay. And something like the S&P is a perfect example. You might have opened up a long position here because you believe this is the bottom, but then it carried on going down. And you would have maybe clocked out here, but you thought, no, I don't want it to clock out because I believe it's going to climb up from this point. So you'd put the keep balance to keep your position open. Once it comes back up to here, that money goes back into your account, that was taken out to keep it open, and you start going back into profit. The risk is if you don't monitor what you're trading and it just keeps falling and it keeps taking 20% out of your account. So please, when you use the keep balance to keep position open, be aware that you need to use it with an ultimate support level in mind that should favor a reversal at some point. Don't open it up here knowing it's going to keep crashing to a bottomless pit because you're going to eat into your balance. I'm going to have a quick sip of water. Okay, probably hear me gulping there. So that's a way to use the auto close function, trailing stop, profit and loss, which is why I've jumped between all of them because it's available for all of them. Now, if you set it up here, it will be only for that specific trade. Okay, but you can actually change that after. So let me open a position. S&P. Do you know what, S&P? I think you're going to likely continue to go down. Doesn't really make a difference at the moment. So again, I open my position, but then I want to edit my parameters. So I can do that here. Okay, I can say take my profit when I'm 10% in profit, close it down when I'm 30% in loss, apply. Little orange dot, meaning it is now here. If I go to show more, I can see everything I've set, the time, the position. I can set the auto close up again. It's fantastic. Happy days. Pending orders, active orders. Okay? And that's how it works. So this shows us the positions you've got open at the moment and the ones that you've set to open in the future. If you delete a pending order, it doesn't charge you. You can open up as many as you like, but they will execute once the price reaches that point. So they're your cryptocurrencies. They're decentralized. They're run by the miners if they're based on blockchain, or otherwise the companies that are running them, and they're not controlled by any sort of government entity. So if you like to trade with crypto, this is where you can do so. Lots more volatility. It is a riskier asset because of the way that its lack of regulation exists. I personally love cryptocurrencies. They're one of my favorite assets because I love opportunity. And I love the idea that Bitcoin, for example, 10 years ago, 20 of them would cost you a single cent, let's say. And at the highest, it was at 20,000 for one, which is phenomenal. I like that side to it, but that volatility can also be dangerous. But everybody knows the kind of asset they like to trade with. Commodities, what are they? They're natural resources, okay? Could have more here, they can change. You know, anything's a commodity, diamonds, sugar, corn, you name it, natural resources, okay? Gold, obviously, it's a safe haven. It's where people turn to in times of uncertainty. And we have a multiplier here, 100 or 150, the same parameters that we saw earlier that we can sell or buy with. And then the movement. If I want to read about gold, again, I go to information and I can. That's pretty much in terms of commodities, how they work. They're not complicated. In fact, most of CFDs, they work in exactly the same way. It's just that the leverages will change, you know, your multiplier will change, volatility will change. You know, crypto is very different to a commodity, let's say, in terms of some of the volatility that might happen. Forex is usually very stable because obviously countries rely on the currencies. So the movements you're seeing are in pips. You know, we're not seeing huge movements, they're pip movements. And then ETFs are exchange traded funds. So these are funds that mimic other actual movements on the market. So when we see the Dow Jones and the S&P, this is mimicking the S&P 500, for example. So if I click on the S&P, you can see I opened that position earlier. I put my auto close positions here, let them do their own thing. I might want to put a pending order, you know, put a pending order there because I think that's a good place to buy. And that will open when it wants to open. And I might want to put another pending order here because I believe that's where it will start going down again because I think it's going to be ranging. You know, it's my decision how it works, and I can see all of those trades all here. Okay, that's where they are in the pendings. In the same way, I could look at information, exactly how we've looked at. It's available for every single asset. And I have my amount that I can invest. As you can see again, up to my full balance. And then the same parameters. Currently, these clocks are here, which means I'm only dealing with pending orders. If I press the X, it goes back to normal. Okay, so that's how you use the products. They're not very complicated. They're very user-friendly. Graphically, I think they're divine. I've never seen a platform as easy to use as this, genuinely. I've used many different exchanges. And to be honest with you, trying to figure out just the graphical use, it's about as hard as learning how to trade. And I think the work for use should be done for you so you can focus on your trading. And that's a belief that I have. Trading history, these are the positions I've opened. Okay, all positions. And I've opened these with you today. If we go to the practice account, you can see my trading history for the trades that I've opened today on my practice account. Okay, obviously I'm more fast and loose when I'm using virtual money, but you know, it's about managing risk. I'm a responsible trader. Obviously I do trade with larger amounts, but it comes after analysis and considering what I'm doing before I do. I don't mind trading with a couple of dollars just to show you ups and downs. That's your trading history. Just before I move on, you can filter by positions in case you trade and you diversify among all these different products. Good on you, but you can pick specifically. Chats and support goes down here. Okay. Before I move on to this board, sticking to the agenda, I'm going to mention to you about the chart types and the graphical tools. Okay. And then we will continue down here. Your chart types are here. Most of you signed up, you would have seen this mountain-esque movement. When I first started trading years ago, I used to use this. I used to put 5 seconds or 1 second live movements. You can see this says 15-minute because I've got, let me just quickly show you. If I go back to candles, I've got the change interval automatically. So if I go to my chart type and click on line, as I move out, it will change. So if I zoom in fully, I will be able to see it moving like a heartbeat. That's the most I can zoom in. So this is what's happening with the price right now. Now, back in the day, I would literally go high, low, just looking for spikes. You know, if it works for you, why not? But that's not how to trade properly. So I don't see as much information here. This is by the second. If I said to you what happened an hour ago, you would need a screen 50 feet long to be able to fit the whole chart in, zooming back, if it wasn't adjusting like you can see here, which it is. But when I click on candles, bars, or Heikin-Ashi, and I will show you these separately, now I don't want that to happen automatically. I want to pick. If I go to hour, every single candle I see on this screen is represented by an hour. This is the current hour. This is the previous hour. Now, a very quick lesson. Very quick. They're called candles. The block is called the body. The line is called the wick. The color, which you can change, by the way, to any color you want, but the default color represents this. Green, the open position was lower than the closed position. Opened here and it closed higher, meaning it moved up. Ergo, the green candle. The red is the opposite, obviously. But why the wick? Because what we're seeing with the block is the open price, the closed price. The open price, the closed price. Okay? Now, the reason we've got a difference with the wicks is because the wick shows us the entire movement during that time. And candlestick formations and naked trading are fascinating, and it's a lecture for a different day. But we can learn so much from these wicks because it can show us different bits of information. For example, if I go to daily candles, we can see for example, here, this kind of candle here shows us that it tried to fall, but then it stopped flat. And then the next candle zoomed up, okay? Because it opened here, it dropped, then came back up. So this is a reverse hammer. This should suggest a further fall, this one here. But we did get another day of increase, maybe because of the fundamentals. But that reverse hammer pushed down, as you can see, it did. Then we have a hammer here, which shows us the price came all the way down, but then it recovered, it went back up, and then we see the market reverse. Are they set in stone? No, they're not. Technical analysis, 60%? Yeah, maybe 60%. It's better than no percent. If you combine that with the news, if you combine it with what you know, it's better than no percent. So if you start learning about candlestick formations, if you start learning about the length of a candle, what does it mean? Why should I worry if this candle is really long and the volume is really long? Well, it means lots of people were selling off at a falling price, okay? Meaning there's momentum. Why did we have this movement, this karma movement before the market started crashing? Because the growth and the falling regularly, it isn't so volatile. This is because of uncertainty and fear. It causes huge movements, okay? And that's where we get volatility. So even assets that don't usually have volatility, I mean, we can see that from BTC. If we go to daily candles, all we have to do is go back to the boom, which will take us a few seconds. And there you are. Look, the craze. Yay, Bitcoin. It's the best thing in the world. We don't know what it is, but we're going to buy it because we don't want to have FOMO. And then we see it climbing and zooming up, daily candles that are phenomenally big. And then suddenly, no one knows what's going on. It just starts crashing. That tells me a lot. I know a lot by looking at the length of these candles. I know that when this zoomed up and it closed almost with a flat for the daily candle, it was almost inevitable that this was going to carry on going up because there was no wick saying it went up and then came back down again before it closed. There wasn't an exhaustion. But I can see here, it carried on. Now, you can say in theory, why didn't it do it here? Because it was flat. Well, somebody wanted to sell off who opened here and made a profit. Maybe they were a big whale and it dropped the price, which then came back up again. Okay? And that happened a few times. People sold off. But then we get another reverse hammer in green, which shot the price back up. So we can learn a lot from candlestick formations. And I'd be more than happy to go through them in the future. And we won't go through them now. But when we combine candlestick formations, lengths, volume, market analysis, technical indicators, which we haven't looked at yet, we start building our portfolio of information, which means we're managing our risk better. Okay? And that's how that works. So if we go back to the chart types, we also have bars like Super Mario Brothers. You can see they work on the same idea, except for the open and close price is the side arms and the entire length is the middle. Okay? Meaning this opened here and closed here. Okay? But this is the entire movement during that time. And if I put candles, you'll see it like a block. Some people like them. I often see them on Bloomberg. I'm not a massive fan. They're a bit chunky, not my type of thing. Looks like Tetris. But if it floats your boat, who am I to judge? Last but not least, Heikin-Ashi. Let's not complicate them. Okay? Let's keep them simple. If I open up two charts, okay, and I pick the same asset on both, otherwise it's absolutely pointless opening two charts, unless you're trading two things at once because you're a go-getter. I'm actually going to hide all of my technical indicators so we've got more space to see and what's happening on the screen. So if I go to the current price here and the current price here, let's make them of a similar size. I think one could argue they're about the same line. So that's the second month, 28th, and that's the 6th. So there. Okay, they're lined up. That is very choppy, extremely choppy. If I'm a long-term trader who's trying to cut out some of the noise, Heiken Ashi does it for me. Look at these smooth tops, these flat tops. What they may suggest is that because Heiken Ashi gives you a smoother line by averaging the movement, there's a whole calculation behind it, which we're not going to go into. As long as I'm seeing flat tops, it should indicate a continuation in that direction. Please bear in mind, it is not 100%. Don't use it as gospel. And if you're using this in shorter time frames, it might not be as effective because of all the noise during the movement in 5-second candlesticks. But if you're using it for daily candlesticks, as we are now, then we can see quite happily that this is moving in the right direction. And it has a slight change here. This is where we start being careful, where we see a wick. Where we see wicks, we could see a reversal. But look, it's quite smooth here. So currently, it's showing me, if I traded with nothing else, and I didn't care about anything else, if I went simply on Heiken Ashi candles, okay, and nothing else, it would say to me, Nicholas, trade up, because I've got flat, flat, and a flat. So if I'm only going based on Heiken Ashi, nothing else, it's telling me it's going to continue moving up. That's what the candle is telling me. Not what my instinct is telling me, not what the news is telling me, but the candle is telling me that based on its calculation. And these flat tops do the same thing, but look, we've got wicks coming out on top here. So the minute we start seeing that, the change, that's when we need to start worrying, when we start seeing these wicks. Although during volatile moments, we might not have the perfect results because the markets, if they're frantic or if they're moving in a way that's not traditional, there's only so much the analysis can do, because regardless of leading indicators, all of the technical analysis is lagging. It's taking information from historical movements and trying to calculate an outcome based on those movements. Okay, so they're the chart types, and then the graphical tools we've been looking at in and out. So if we look at the graphical tools, then we've got choices of line, trend line, horizontal line, vertical line, and Fibonacci. Okay, line means I can draw on the screen and I can make it longer or shorter, and I might use this to see trends. I'm aware of time, so I'm not going to go too deep into it. But I can move it about from the middle or change the direction from here and length. I can also change the color and the width. Okay, this is to lock it, this is to delete it, this is to clone it. Okay, second one down the line is a trend line, which is ongoing, doesn't end like a lightsaber, but does the same thing. But if you like neater charts, you might not want to use that. Then we have the horizontal line, which we use for support and resistance, like I've got here. So the way you'd use support resistance, just quickly, would be, say if you were trading today and you wanted to see if there's a channel, you'd zoom in and say, okay, is there any support resistance? Again, this is very loose. I might put a resistance line, say here, and then I'd clone it and say, where's their support? Well, there's several support lines. At the moment, that seems to be one. So I've made a channel that will help me see how it's working. And my RSI shows oversold, which means we should expect this to start going up. If it's moving sideways, you have more of a chance of understanding which direction, because when it's trending, it won't work as well. You need a sideways movement for leading indicators to work. So we also have vertical line, which you can put like this to say, I started trading here, or maybe I closed my trade here, or maybe you want to pinpoint a specific date. So you move it here and say, this date here was the 3rd of March, and I'm interested in this day. So I'm going to, of April rather. I want to see what happened from that date on. You know, it's your business why you might use it. And then there's Fibonacci. Okay, now Fibonacci It's slightly more complicated for you, so I don't know if I want to go into it too deeply. But it's basically a predetermined set of support and resistance lines. Okay, and the way they work is they show us different points. Now they say you're always chasing zero. So if I click here, you can see that that shows me 100. Okay, and if I click Fibonacci on the top, it shows 100 here. And if I drag down to the lowest point, it shows the 0 at the bottom. Okay, so we click and we drag. Now we can see bear with me. We can see here that the downward trend we're seeing, because we're always chasing 0, it's formed the 61.8 line between here for the support resistance. And we can see this is quite a big movement. And we can see that it can also go back up to 0 eventually to complete Fibonacci. Now, we can go into how it works in terms of calculation, and we can also use it for stop losses and all sorts. But the main thing to focus on for now is its use in support and resistance. So if I put, I mean, this is 30 seconds. Let me just say, do not use it for short-term trading because you've got far too much noise. If you want to, you're welcome to, but I wouldn't suggest it. So let's go to 12 hours, something which is more substantial. Okay, so again, I pick up take my lowest point to my highest point. Okay, and they act as support resistance. So if I go to 1 hour, you can see if we zoom in, they have been respecting these lines as support and resistance. Now, support resistance means when a candle touches whichever line up to 3 times. Okay, and if it touches it 3 times, it becomes a resistance from the top, and if it touches it from the bottom, it becomes a support line. Okay, and that's how it works. Is Fibonacci always going to be perfect over your candlesticks? Maybe not perfect because they're predetermined sets, but it's very useful, at least for entry points. And the 61.8 mark is usually one that people follow. Okay. Sticking on, introduction to indicators. I'll show you where they are. They're all here. We also have templates which you can save them and widgets, which is additional information. I'm trying not to rush, but I don't want to over go with this webinar. You can pick either by type or by name. Okay, so we've got leading indicators and lagging. You can read about which are which if you want to learn. But leading indicators, traditionally, they're used with non-trending environments, and lagging are with trending, meaning when they're doing something like this. And popular ones are Bollinger Bands, Alligator, RSI, and MACD. In the fear of going over, because I understand that I've kept you, I will show you how to contact support, and then we can set up further webinars for the future. I'll come back to you for some questions. Support can be contacted in quite a few ways. You might come here to help, okay, ask a question. You might do it there. You might come down here and ask a question, okay. You might come here and contact support, okay. There are many ways to contact support if you wish to, okay. They're open 24/7, which is great. Speak many, many, many languages. I'm not going to name them all, but chances are you won't be stuck. And it's lovely to be able to contact someone at any given time. Just quickly, video tutorials are available to you. Okay, they're fantastic. You might want to learn about the basics or options trading or tech analysis. You know, we have everything you need in this one platform. If there's something we've not been able to cover, it's only because of time. And if you request it, then we can go back to it at some point. So let me get back to our main page, and we'll allow for questions. So I'm going to come back to you now and take off the screen share. So I can now see a lot of what you've been writing, and I think Peter has also been assisting. Are there any questions that I need to answer specifically, Peter? Do you want to write to me now, any of the ones I want to? Because we've got hundreds and hundreds of questions. I'm so glad that we've had so many of you involved. And you can watch this again in the future. Of course, we're going to be putting this online. Okay. Okay, so if Peter feels there's anything specifically I should answer, because like I say, there are hundreds of messages, then I'll answer a few questions now. Otherwise, what we will do, advise on the economic calendar, what is the best indicator, support resistance. Okay. So we've got a whole bunch of questions. Let me very quickly go over with you just a few of those questions. We're talking like 5 minutes only, just so you don't feel that I've left you in the dark. So I'll share my screen with you once more, just very quickly. So you should be able to see my screen now, right? Yeah, very good. So if I quickly just close all these down, so we've got a nice clean slate. Let me talk to you about a few things that you've asked. So I'll go to Forex and I'll go to Euro USD. So support resistance. We take our graphical tool. So I take my line and I can have diagonal support resistance, for example, like here. Now, obviously, support should not be broken through like this, but it can break through. It just means that it could be a new position to bounce off. So here, for example, I'm going to put this off the full screen mode because it doesn't calibrate as well when I'm doing the webinar. Here we can see, for example, we could potentially treat this area here as a support resistance because it's been an area that is a channel, but it needs to honor touching at least 3 times diagonally, okay? You can see that it's working between this channel. But traditionally, people like to use it for sideways movements because it helps them to go high and low, especially if they're doing shorter term trading. So if I pick for you just any random stock, doesn't really make a difference. We might have to go back a bit though, because with all the volatility now, I fear that it will only be going in one direction, which is trending. So somewhere like here, okay, this environment, now these are daily candles. So they're not necessarily going to be the same for all environments of trading. But if I move this to 4-hour candles, can get a more accurate window. So I can take that there. I can even go up to here, or if I want to keep this resistance line, I can. Now, traditionally, when we're using something like the RSI, which is a leading indicator, meaning it works well with, I'll show MACD as well, which means it works well during sideways movements. Now, you can see here, the green line indicates this area of the platform, which means that's where I'm assuming my resistance line is being considered by the RSI. Okay, can you see here? It's touching the red line, meaning it's oversold, meaning it could reverse and go back up. Well, it did touch the support line, which 1, 2, and if I go back and forward, there's been a third one here. So it's definitely a support line. And then it starts going back up. But then it also touches resistance at this point. Okay, so that would have been at one point a line of resistance. It doesn't mean because there's a further line of resistance that this one is now void, because it would have still been a resistance line. It just went higher at this point. But when it's going in a specific direction that isn't sideways, you can get false signals. So if you see here, it hits again oversold and corrects. It comes up. It hits the overbought area and comes down a slight bit, but it's not following perfectly, okay? So it's not perfect support resistance in this asset because I haven't set one up. But what I want to show you is what happens to the RSI when it's trending. You see this? Look at the RSI. It's constantly overbought. So I don't have a clear signal on what I should do. Whereas if I go somewhere like the alligator, which is made for trending periods, you can see just when the RSI started to malfunction, the alligator started working. And how did it start working? Well, in the area that we consider to be great for the RSI, like here, the alligator is all tangled up, not giving us any information, but the RSI was telling us buy, sell, buy, sell, buy, according to the support and resistance. Whereas here, the alligator opened up slightly, but nothing special. I wouldn't really trade on this just yet. If you look at this point here, where it really goes into a trend, alligator shows us emerging trends. So now it's trending. I don't want to use a leading indicator necessarily. I might prefer to use a lagging indicator, which shows me a trend. And this will continue being successful until, again, it goes into more of a sideways movement, as you can see here. So now we go back to the RSI. And I go back to my graphical tools, and I might want to put there as a resistance, and I might want to put there as a support. It's a very small window, but it's still a sideways movement where the alligator struggled. Okay, but it was short, so it carried on. If I change the candlesticks, however, within that time period, and I get more information, you see that it isn't as small a corridor as previously thought. Okay, you can see that it's honoring the overbought, and oversold has moved to this point here now. So that is our new channel in this amount of time. Okay, so now we have oversold, then we have overbought. Okay, you can see that it's not touching the support. The wick just almost touched the resistance line here, and it hasn't fully touched here. But then it comes back down, and again, because it's volatile, we see that it touches, but then it goes through slightly. But the general zigzag is there. Can you get examples where it's perfect? Absolutely. Yeah, you can. And if this was a lecture on support resistance, if we were going over support resistance, I would prepare loads of historical charts and go to some good live environments where we can see support resistance horizontally perfectly working with the RSI. Now, when it comes to leading and lagging, that ties into this. A leading indicator, like the alligator, works well, as you can see, when it develops a stronger trend in one direction. whereas a lagging indicator prefers to have a sideways movement. And that's just basically how that works. It doesn't mean you can't use one without the other. You can. And often I will use a leading and a lagging at the same time just to see how they're communicating, to see if they're basically contradicting one another. Often they will, but why? You will never get perfect trading conditions, but like I said before, you use it all together and you combine it. So let me quickly close that down and come back to you guys. Okay, so Peter's saying it's going to be sent out to everybody. I hope you've enjoyed the webinar. We are going to wrap. It's been on for a while. I think I've gone slightly over, so thank you for watching. I hope you haven't had your ears chewed off, but hopefully it's been helpful to you into understanding how to use the platform. Okay. In which case, I wish you all a very good day. And the replay will be available and everything will be done in a way that you can pick specific categories. Okay? Okay, have a good day. I'm ending the event.